Welcome money finders, enriching the lives of people we touch. 10 ways to double your money fast in 2021. Don't let your financial fears ruin your retirement. You can invest and grow your money for your old age. You can find safe investments and good money-making ideas if you know where to look, and that's where we come in. There are some simple principles you can follow year on year that will help you make the most of the money you have and stop you being conned into losing it. Here are 10 of the best ways to grow your money. For more ideas on financial freedom, make sure you like and subscribe to this channel. Number 10, be regular. In saving and investing, it's a good idea to be regular. Even if you have only a small amount of money left over each month, in the long run, it's much better to set up a standing order from your bank account into an investment each month so that the money is put away before you even see it. Also, by putting money in at regular intervals, ideally once a month or once a quarter, you benefit from what is called pound cost averaging, which means you catch the ups and the downs of a volatile investment like the stock market, and in the long run this smooths out an average decent return. Number 9, work overtime. If your job pays you overtime, take advantage of your boss' request to stay late or pick up an extra shift. Depending on your hourly wage, getting paid time and a half could add up an extra $1,000 fast. But working too much overtime can lead to burnout, so you need to balance your need for additional cash with your need to have a life outside of work. Number 8, use a high-yield savings account. If you have money that you don't expect to use in the next few years, investing is your best bet. But if you want to sock away some cash for your emergency fund or a large purchase, a high-yield saving account is probably a better choice. These operate just like traditional saving accounts but offer much better interest rates. The average saving account APY is 0.09%, but some high-yield savings accounts have APYs of more than 2%. Number 7, pay off your mortgage. One of the safest and most tax-efficient investments you can make long-term is to pay off your mortgage early. Being mortgage-free gives you a wonderful amount of freedom, as usually, so much of our pay goes into paying the mortgage that we can find ourselves tied to a job we don't like just to pay the mortgage. Take note, financial advisors tend not to tell people to pay off their mortgage. They are, however, taught to push insurance products and insurance-based investments. Coincidentally, financial advisors make no money from you paying off your mortgage or existing debt, but they do stand to make commissions from recommending insurance products and investments. Funny that? We love the idea of paying off your mortgage early because 1, it gives you freedom, particularly if you're self-employed and have to create work each month to make the payments. 2, it is tax-free. Any money you overpay into your mortgage saves you the full amount of interest, unlike savings account that will tax you on the interest you pay. 3, it is one of the safest investments you make. When you pay off your mortgage, you pay it off, and that is it. There is no uncertainty about what will happen to your money. 4, when it's paid, you own your home outright. No longer does it belong to the bank manager. 5, the mortgage companies hate it because they lose money, and don't we just love the upper hand? To pay off your mortgage as quickly as possible, you will ideally need a flexible type of home loan. If you currently have a fixed mortgage, the chances are you can only overpay about 10% a year. Depending on how long you have remaining on the fixed deal and how much the lender will charge you to switch out of it early, it may be worth staying with the fixed loan until the end of its term and then switching to a more flexible product. While you are with the fixed loan, you could pay off the 10% or whatever the maximum is, and also set aside money in a savings account to pay off a lump of the mortgage as soon as you come out of the fixed term. Number 6, get informed. Managing your money is like eating healthily. You don't need to be a qualified nutritionist to know how to eat healthily, but you do need to know some basic facts about fruits and vegetables, vitamins, proteins, minerals, etc. to work out how to have a balanced and healthy diet. It's the same with managing your money. You don't need to be a qualified financial advisor, but you do need to have some basic knowledge about how money works. So, spend a little time each week reading the money pages in your weekend papers. They tend to have the most money articles or online. Number 5, start a side hustle. If you're looking to make a little extra cash in the short term, there are often seasonal jobs available during the holidays and summer months, but it's also very possible to start a side hustle and generate extra cash year-round. There are a lot of options these days. You could drive for a ride-sharing company, sell things online, walk your neighbor's dogs, or teach classes in your area of expertise. Think about what you're good at and how you could best monetize it. Then, advertise your business to your family and friends to help generate customers. Keep in mind that you don't get to keep all your side hustle income. You owe a portion to the government. If you also had the side hustle the year before, last year's tax return should tell you how much you must pay quarterly. Number 4, get out of debt. Debt is the devil when you want to grow your money. It's probably the single biggest barrier to wealth for most individuals. Before you even start saving, any non-mortgage debt need to be paid off as quickly as possible. Credit card debt along with overdrafts and loans, particularly secured ones, need to be paid off as a matter of urgency. Number 3, bonds. Your mix of stock and bonds should reflect your age, goals and risk tolerance. If you don't fit the profile of somebody who should be heavily invested in equities, such as S&P 500 index funds, you can look to bonds to double your money. If your bonds return 5% on average every year, according to the rule of 72, you can double your money every 14.4 years. That might sound disheartening compared with doubling your money in 7 years, but remember that investing is a bit like driving on a highway. Both fast drivers and slow drivers will ultimately reach their destination. The difference is the amount of risk they assume to do so. By obeying the speed limit, you put yourself in a position in which you are likely to arrive at your destination in one piece. By stomping on the accelerator, investors can either reach their final destinations faster or crash and burn. Driving is always risky, just as investing is always risky, but certain investments expose you to higher levels of risk than others, just as disobeying the speed limit exposes you to greater risk than obeying the speed limit. Number 2, become a real estate broker. Starting a real estate business requires huge startup capital, but there are other ways to take your share of the billion-dollar real estate industry without investing a killing. One of such ways is to become a real estate broker. Many real estate businesses, like other businesses, are constantly in need of customers. Your role as a broker is to link real estate company with customers looking to buy property. For each deal that goes through, you earn a commission which is always very attractive. A good example is when you bring a customer to a real estate company and that customer ends up buying a house worth $90,000. If the agreement between the company and you is that you will get 3% of any seller's commission, that means you will get $2,700 from that $90,000 deal. That's cool, right? Now, imagine how much you'll make if you help close 5 to 10 deals per month. That's huge profit considering the fact that you invested very little money while starting out. Number 1, share your knowledge. College students can score some extra cash by selling their class notes on StudySoup, an online marketplace for study materials. Elite note takers can earn $500 a semester by selling the notes they take in class. Udemy allows you to share and monetize your knowledge by creating online courses for the site's 24 million students. You get paid every time someone purchases your course. Try one or a combination of the strategies in this video. If you stick with them, in time you can grow and maybe even double your money. Money finders, we hope you have enjoyed this video. Keep the discussion going in the comment section. Find us all on social media platforms. Like and subscribe to support our channel. Thank you for watching. Until next time, goodbye.